Sultans of Swing Trading. This is night one. We are going to get into the foundation, why swing trade, how to read the market, and we're really just going to establish the foundation for you guys to build everything on here as we move forward. And just so you guys know a little bit about me, my name is Jeremy Hritz. Typically, you'll see me in the YouTube videos with the hat on. I've got a five head. I always joke about my five head, but I do have hair up here. I just actually got a haircut, feel pretty good. But I am a former educator, and really, I can't even say former educator because I still teach. It's still a passion of mine to teach. Before it's all said and done, once my kids go back, or excuse me, when they go to college, because they're young now, I will return to the classroom because I just love to teach. But whenever I did leave behind the school system, the principalship, and education, I became a trader, an investor of all things. And if you would have told me that 10 years ago, I'd be like, you're crazy. There's no way. But I ended up finding my passion, and I love what I do. And to be able to teach this to other people and have that change their lives, even better. I have the education business that I do here with Courage Pays Better Than Fear Trading, the YouTube channel, which I have a lot of fun doing. I get to teach traders. I get to work with traders one-on-one in group settings like this. It's a lot of fun. We have a wonderful community. A lot of those people here are here tonight representing. And I'm also, I love to push myself, do difficult things. You need to be able to do those things as a trader or if you're involved with markets, because you will be tested mentally. And right now I am training for the Ironman Maryland on September 19th. I believe I have 96 days to go. So I'm getting close and getting excited and a tad bit nervous. And then finally, as I said, family's everything, and I'm also a hot pepper connoisseur. I have 52 hot pepper plants growing in my yard right now. They include jalapenos, scorpions, ghost peppers, and Carolina Reapers. So if you guys want any hot peppers, I'm your guy. So just let me know. So that's a little bit about me. I have to share this disclaimer with you before I teach the class. This is for educational, informative purposes only. I'm not your financial advisor. I am not responsible for trades that you take. You're the one pressing the buttons. There's risk involved with markets, obviously, but I do want to share that with you before I get into the content, just to make sure that we are clear about that. But what we are here for tonight is to learn how to swing trade. In this class, whenever I was setting things up and putting it together, I wanted to rebrand it with a new title because before I called it Profitable Swing Trading. And you know what? That title was wah, wah, wah. So I wanted something powerful. And so Sultans, you think of Sultans of Swing. I think that's is it a Dire Straits song from back in the day? But a Sultan, if you define that, it's a ruler of absolute authority. And from this perspective, when we're talking about markets, it's one who does not react to market conditions emotionally, but commands them. A sultan studies the terrain of the market, plans the campaign, your trade, and moves only when the moment is right. Right. And so this is how I'm going to set this up and explain this to you in this course so that it's easy to understand, it's simple, and you can apply this when you go out into the markets. And so ultimately, I want you to know when it comes to the markets, when it comes to swing trading and even day trading, you are the master of your domain and you cannot trade emotionally, right? And if you're going to be successful in this space, you have to be objective. You have to be mechanical. You have to be like the market is heartless, right? We were joking about that in the community today. You rule over your watch list being those stocks that you follow and that you trade. And you roll over it with a plan, with a process, and with discipline. And you're decisive under pressure. You don't hesitate. You've done the preparation. you've done your study, and when your setup triggers, when your criteria is met, you execute. Fear doesn't have any seat at the table. You're not afraid, you trust the process. And if it does not work out, you take your loss, you move on to the next trade. And you're patient for the right price. A sultan waits for the enemy to come to him. And in the trading space, in markets, we wait for the price to come to our level. We don't chase, we don't FOMO in, we don't buy at the all time high and get stuck holding the bag. We wait for the price to come to our level and then we strike. And so by the end of this course, by the completion of the 4 nights, you will all be sultans of swing trading and hopefully successful in this space. All right. So our course schedule, all of the classes will begin at 8:30 p.m. I will have the class sent out to you, the recording of that within 24 hours. And I'll have a playlist set up that will be shared with you so you guys can access that. I just ask that because you registered and signed up for this, that you do not share that with others. These are courses that you are here participating, that you have access to. So these are yours. But just to give you an overview of what we are covering. So we're here today on the 15th. We'll be back on the 18th. Tonight, we're going to get into, again, the foundation. We're going to talk about something called Dow Theory, which you might be saying, what in the world is that? And trust me, I'll make it simple for you. It's going to help us understand the structure of the market, the trend that we're in. We're going to get into market context, moving averages. The 18th, we'll get into the concept of buying low and selling high. What does that actually mean? And what does it look like on the chart? And we'll get into entries for trades, stop losses, profit takers, the 50% rule, how to turn a winning trade into a trade that you can't lose. Yes, you can do that by managing it. On the 22nd, we'll get into volume. We'll talk about traps. And then we'll start putting all of these steps together. Basically, I'm giving you a checklist to follow for swing trading so that you can follow it to a T to execute. And then finally, the last class on June 24th, we'll get into the relative strength index, which is RSI. We'll talk about divergence. We will back trade the process and the steps together, and then you'll see the full system at work. So again, you will leave here with a system to follow that you can implement and swing trade. Now, what I will tell you, and I always say this first, you don't want to start trading real money out the gate, okay? You need to practice this first. You need to back trade it or back test it. You'll hear people label that process. But you want to get that practice in first so you have reps in. You could see that you could do it on paper before you actually go live. So that is something that I always stress. And the second thing is whenever you're ready to go live and use real money, you have to start small, meaning $5 of risk, $10 of risk. You have no business starting with a large risk unit until you can prove you could do it at a small level. That is the best way to do it. I'm always going to err on the side of protecting your capital, right? And being conservative. You will not get any YOLO encouragement or go risk it all from me. That's not what it's about. We need to honor and respect our cash flow, and that comes from being protective. All right. So that is what we're looking at, the 15th, 18th, 22nd, and 24th. And it's going to be a lot of fun. Right now, the course outcomes. What are you going to be able to do when you leave here? Again, this is the teacher in me. You're going to understand the theory and logistics of swing trading and why it works for any schedule. So when you think of trading the markets, day trading, which we'll talk about here soon, is intense and is not the most applicable to somebody who is working full time. Swing trading is. So we'll talk about that. We'll talk about how it fits with any schedule. You're going to learn a specific repeatable strategy with clear rules for entries, exit, risk management. So you'll know how to do all of that. You'll know how to actively manage your swing trades to maximize your profits, minimize losses, and I will model the full procedure for you as we go through this, and we'll apply it at the very end. And then you'll be able to take this and I'll show you how to practice it on your own so that you could build your confidence and see that you can actually do this. And that the market isn't this big, mysterious thing that is reserved for people from Wall Street. That's just not the case. So, what we cover in this course, we're going to talk about why swing trading, day trading versus swing trading. What are the differences? Dow Theory, which I can't wait to talk a little bit of Dow Theory. You must know this. I'll even give you a little bit of background on that. We'll talk about support and resistance, simple moving averages, exponential moving averages, buying low, selling high, applying volume analysis, relative strength index, also known as the RSI, and then putting it all together through back trading. So you guys are going to get quite a bit over these 4 nights. And let's jump into it. And again, I will be pausing at times for questions so that you can engage, but hopefully you have something to take notes in. I did put that in the email to make sure that you're taking notes. But ask questions, clarify, participate, engage. That's what's going to make these concepts stick for you. All right. So, and I will be pausing at times too, to have a drink of water. With the Ironman trading, I'm a little thirsty, so bear with me. But let's go and get into it. Here we go. So, why swing trade? So this is the best trading style is the one that you can execute consistently without quitting your life. And here are the 4 reasons why swing trading it's really the best place to begin. And I will start by saying this. And it's I used to believe that everybody should day trade when I first got into this world. I don't believe that anymore because day trading is intense. It is, and it does require time. It really does, and there's a lot that goes into it, and it can be stressful. It really can. Swing trading, on the other hand, takes that pressure off, and I do believe this now today. And I still believe everybody should be involved in the markets. I don't believe that everybody should day trade, but I do believe everybody should swing trade and invest long term. I really do, because this is something that anybody can learn if they just put the time in. I truly do. So, why swing trading? Why is it so important? It gives you more time for your trades to work out, and it is less stressful. So, a swing trade, by definition, is any trade that we take that we are in for longer than a day. So if you think about the market, it is open from 9:30 a.m. to 4 p.m. Eastern time. So when you're day trading, you're finding little movements within that window that might be 30 minutes long, an hour long, 2 hours long. But with the swing trade, you might get in a swing trade and you're in it for a week, 2 weeks, 2 months, 6 months, right? If the trend is running, you're going to run with it. So it takes the immediacy of time off of your shoulders. And in terms of preparation, you can do your analysis in the evening of your charts. You can set your orders up in your broker in advance and then just let the market work. So that's the cool thing is once you identify your levels on the charts to say, hey, I want to enter this trade here, you could put your order in the night before along with your profit taker and your stop loss, and you could get triggered into the trade based on the order that you put in the night before, right? So you let the market work. You don't have to watch every single candle like a day trader. You don't have to do it as a day trader. As you do it long enough, you can step away from the screen, but definitely less intensity, more space, less stress, and more time, right? It's also compatible with any schedule. So if you have a career, if you're working, if you have a lot of family responsibilities, or if you have your own business, swing trading is perfect, right? Because here's the thing, you're oftentimes planning out, you're looking at your candlestick charts and you're identifying the levels where you want to enter a trade. And you might have that, you might be watching a stock right now to say, hey, I want to get in here, but it's not at my price. Maybe sometime in August, I could see the price getting here. So what's today? June 15th. Come August, that price might come to your level. And guess what? You doing your nightly study, you set up your entry, and you get in the trade. But you've been preparing since June for that trade. And it's when you have that type of patience and preparation that you're ready to execute when the conditions present themselves, and it doesn't require that in the moment intensity of day trading. Wider stops. So when we talk about stop losses, that means, okay, this is the area where if the trade goes against us, we're going to get stopped out. This is where it kicks us out of the trade. We take a loss with the amount that we're willing to lose. With swing trading, you can use a wider stop loss, which gives you more room for your trade to work out and more room for you to win. And that allows for trades to develop. And if you think of day trades, day trading, you can get some wild fluctuations. And here recently, I don't know if you guys have been paying attention to some of the headlines with the war between Iran and the United States. There's a peace deal that's on the table that's going to be signed, and oh no, it's not happening now. That whole process that really started at the end of February has caused some massive spikes during the day to where your stop loss in one candle could get wrecked, right? Because the moves are so big. But when you're swing trading, you're less likely to get stopped out on noise because you have a wider stop. So that's something that makes swing trading more conducive to patience and time. And then the last one, actually, there's two more things. I have a special extra one I'll add here, but this one is very true. All right. Swing trading is just as profitable, if not more, than day trading. And I, some of my biggest trades have come from swing trading. So I could tell you that if you catch a runner on a swing trade, and it gets stuck in a beautiful trend and just keeps going and going and going, you can ride that trend and continue to protect yourself as it moves, and you can generate tremendous profit, right? And so if you think about that, you can have one swing trade that delivers an amazing return that can be life-changing, right? And not that every trade is going to be like that, but swing trading is profitable. And you don't need dozens of trades per day. You don't need a day trades. You just need the right trades. And then here's the final thing that I'll throw in here is when you're swing trading, you can eventually take it to the next level to where you use options to generate profit, short-term profit off of your swing trades, right? Short-term income using things such as call options, selling covered calls, or to even get into the swing trade, selling cash secured puts, where you can essentially get paid to set up a trade and buy shares. So there are so many things that you could do in the market. That's a little bit more advanced than just trading shares. But I want to just share with you how broad and how big the opportunity that is available to you in the markets. All right. So that's why we swing trade. So day trading versus swing trading. Same technical skills, very different lifestyles. You gotta pick the one that fits your life, right? I love day trading. So I'll say that right now. I love it. But I love swing trading too. I love markets. All things markets. I love it. I love it. So anyway, here's the difference between the two. So day trading, full market hours. You're in and out of your trades in that 9:30 a.m. to 4 p.m. Eastern time window. It's time intensive and it's mentally demanding. You've got to be focused, locked in. You got to know what's happening in the broader markets. Um, And it can be a lot, right? And it's got to be something that you want to do. You have a desire and passion to learn it. With day trading, you typically have tighter stop losses because you're just looking for smaller movements. And like we talked about with the headlines here as of late, noise can stop you out of trades. And you're making lots of decisions on a daily basis. And that doesn't mean that you're taking tons of trades. It means that for an individual trade, as new information is coming in or as different price movements are occurring, you have to make different decisions to manage that trade. All right. So, again, a little bit more intensity when it comes to day trading. But similarities, the technical analysis is the same that you do for swing trading. You can day trade any stock. However, and I will say this, you never want to trade garbage stocks. You never want to trade penny stocks. There's a time and place to do it. You want to know what you're doing first. So I'm going to step out of the script for a second here. And this is just a pro tip. Be careful trading garbage. A speculative ticker that somebody is saying, oh man, this thing's $1.50, it's going to go to the moon. Be careful with those types of stocks because typically what will happen, you'll get caught up in a pump and dump where you'll get the big boys throwing money in it, they'll run it up, and then just when it peaks and retail jumps in, they'll short it, drop it, and then you get stuck holding the bag. Start your trading journey by trading blue chip high quality businesses. And there's this thinking out there that, oh, if a stock is $400, I can't trade it. Well, just trade one share of it. Or if it's $200, just trade one share of it. That's all, right? But stay away from trading garbage, right? All right, back on the script. Now, swing trading. You can plan on during the evenings, weekends. You can trade on your schedule. You don't have to be in front of the screen, in front of the charts. It's less intensive. You execute once. You could check in once a day, every other day. Let the trade play out, right? Less stressful. Wider stops, more room for the trade to develop. And essentially, you're going to have maybe a handful of high conviction setups per month, or you might have a month where you don't see anything, right? And that's completely fine. But all the while, as you're studying and preparing, you're watching. And then, like I said, a few months down the road, your conditions are met, you are ready to execute. And again, the technical analysis is identical. You can use it on any stock and can be equally or more profitable than day trading. All right. So I'm going to pause there for a second to see if you guys have any questions. And I'm going to give a hello to Ben and Wade. Wade says, loves the name. First, I attended the Candlestick Kung Fu. Now you're at the Sultans of Swing. That's right. Wade, congrats on was it Microsoft with your win today? And Ben had an NVIDIA win today. Congrats to you guys. I think Tammy had a win today. Uh, JP Fox had a win today. Yes, sir. You guys were crushing it. All right. So it doesn't look like we have any questions. So throw me let's just get a one here. Hey, Zoe. Good to see you virtually. Drop a one in the chat if you are ready to jump into Dow Theory. All right, we got lots of ones. All right, we're good. That's why I just need to see you guys are ready to go. All right, here we go. Dow Theory and market context. You know what, guys? I got to throw on the glasses here. Got to put the glasses on. These are my Mr. Roku glasses from back in the day. Mr. Roku, ticker symbol ROKU. A deal just got done where Fox is going to buy them out. So they've been on a tear. So, yeah, so these are my chart glasses. So we're throwing these on. I got a little glare off the light here. It's all good. So Dow Theory and market context. This is going to set the stage. Everything's going to build on itself as we move through this course. All right. So think of the teaching here. It's sequential. Everything that I'm teaching you, there's a reason why I'm teaching it in this order because everything is going to build on itself as we move forward. Okay. So before you trade a single stock, you need to know what the entire market is doing. Now, that might sound a little bit overwhelming, and you might be saying, "Well, Jeremy, you said that this is swing trading is less stressful." It is, but we need to understand what is happening across the market. I'm going to show you how to do that. Now, there's this thing that is known as Dow Theory that was created by Charles Dow back in the late 1800s. It was in a series of essays between 1899 and 1902. And essentially, what he did was create a system for identifying trends through market movements. And it is powerful because it is still used today to identify and determine where the markets are, right? So it's the foundation of all technical analysis, right? And what we mean by technical analysis, it just means looking at candlestick charts, moving averages, and identifying where the price potentially could move to, either up or down. And Dow theory tells us where the market is in its cycle and where it is going to go. Now, there are three parts to Dow theory, right, that you need to know. There is first what is known as the primary trend. This is the big picture, and this could be months to years, all right? And this is the overall bull market or bear market. And so you're either in a bull market or bear market. You might have a little bit of sideways movement, consolidation, but typically that occurs within a bull market or a bear market. And here's the thing, that primary trend cannot be reversed quickly unless you have something like 1929, you have something like Black Monday of 1987, you have something like the COVID crash of 2020, where you just have a legit crash, right? But this primary trend is not changed very quickly. This is the tide, and you want to swim with it, right? Like my Ironman. I'm a terrible swimmer, guys. I hope you know that. The only thing I could do is stay afloat. I'm basically teaching myself here to swim right now. But you're swimming with the current, right? So in a bullish primary trend, we are buying the dips. In a bearish primary trend, we are selling the rallies. Or in trader lingo, trader terminology, you'll hear people say, sell the rip in a bear market. And right now, just to quiz you guys, what is our primary trend in this current market? Is it a bull market or a bear market? It is a bull market, right? Our primary trend is a bull market. Great. Now, the secondary trend, these are corrections, counter moves, and they could be weeks to months. Okay. Now, a correction is defined. So we're in a bull market. A correction is defined as a 10 to 20% decline from the all-time highs. So as long as a drop is 10 to 20% and not more, it is a normal correction. And that is what is known as a secondary trend. And so it's a pullback in a bull market or a bounce in a bear market. And here just recently in 2026, from the end of February into April, we had a 10 plus percent correction on the IWM, the Dow Jones Industrial, the NASDAQ. We didn't truly hit 10% on the SPX. And here just a few weeks ago, we hit almost 9% on the NASDAQ. We hit 5% on the SPX. So we had some nice dips. We had a correction. And so those were secondary trends. These set up your best swing trading opportunities, but it can be scary because if you just go back to the sell down that occurred all of March into April, everybody was afraid. Oh, we're going into a bear market. But those people who bought that bottom, you see where the market is now, they made a lot of profit, right? So that's our secondary trend. And then finally, you have the minor trend, or it's known as daily fluctuations. Remember, this is all part of Dow theory, and this is just your day-to-day noise, your intraday moves. Swing traders really, they look at it, but a day really doesn't have a massive impact on a swing trade unless it's a massive candle that hits your profit target or your stop loss. But that's a rarity in swing trading. And in swing trading, daily moves don't shake out a well-planned position. Swing traders zoom out. All right. But by knowing this, knowing where we are in the primary trend, knowing what the secondary trend is, understanding that minor trends, daily fluctuations are going to happen, we can approach the market with composure, understanding, and a long-term perspective. All right. So here is the 2021 bull market. And the 2020 bull market too that came after COVID. And you could see this massive run up, right? This is a bull market. Now, here's what I want to show you. This little dip here that comes into play, right? You can see where it drops. This sets a recent low here, and this would be defined as a secondary trend, right? This is your correction, right? So here's our primary trend, right? This is our primary trend. I'll put PT here. This little dip, this is our secondary trend. So we can identify where we are in the cycle. And so just by knowing that, hey, our primary trend is bullish, we got a little secondary trend and pullback here, we're looking to play that bounce long. But here's what we have to pay attention to. After this dip that came in, we now have a reference point to say, all right, here is the recent low. And then you could see following that low that was made, new all-time highs were made here right before the start of 2022. And does anybody remember? I'll be very surprised if somebody gets this. Does anybody remember what started happening in 2022 that sent the stock market into a hissy fit? I don't even know if you guys, that's like a Pittsburghese word. Basically like a temper tantrum. Anybody? Yeah, the rates. Yes, Ben, absolutely. So the Federal Reserve started hiking interest rates because inflation had jumped higher as a result of the fiscal stimulus from COVID. And whenever the interest rates started going higher, markets don't like that. And they started selling down. Now, here's why I wanted to point this out. Because you have that low drawn out on your chart. Here's how you can tell when the primary trend is going to change. When you have that low marked out, if you break below it, that is a warning signal that says, hey, keep your head on a swivel, be aware, because the primary trend could change. All right. And then you see what happens from here. We push back up and notice we make a lower high. And then we drop back down and we actually come lower than that low here. We push back up. This is still a lower high from the all-time high. And then look what happens. Boom, we head down and we go into a bear market. So the way that you could tell if that trend is going to change is when that low gets taken out and you keep making lower lows and lower highs, that tells you that the trend is going to change. Okay. So that's something that you want to keep an eye on too, that you could watch in this current market on any chart, really. Identify the most recent low. If you come down and break below it, you're on watch, right? There's a warning signal that was just fired by the markets. And then you want to see what it does. If it keeps going lower, then the potential is there for the trend to change. All right. So bull and bear market phases. Knowing which phase the market is in determines how aggressively you trade and what setups you look for. Now, I will say this. Personally, I do not do short swing trades. I will do those with put options at times, but I do not like being short with shares for swing trades. Day trading, no problem, right? You can do swing trades with shorts. I just prefer not to do them. But bull market phases, there are three components of this: accumulation, where your smart money is quietly buying, and you start to see the volume start to tick up, and most investors, most retail traders aren't aware. But when retail traders do start to catch on, investors start to catch on, that's known as public participation. And this is when they notice the uptrend and they start to pile in. And then this is when you get the real big move in the market. This is the best swing trading window. But then what happens is you get to an exuberance level where things are just running hard, right? Excess. And this is distribution. And this is where you often hear it referred to as your smart money. These are your big institutions, your insiders. This is where they begin exiting the trades while retail is still buying in, right? And that's where you have to be cautious because the top can be near. Like right now, if you look at the market ripping higher, you got to be careful about jumping in because we are stretched to highs. Now, bear market phases. There's what's known as distribution. News of decline spreads. Insiders are selling. People are just reading headlines about the drop. Then there's public participation. This is where everybody panics and they unload their positions. They sell to reduce their losses, right? They're taking a hit. This is the longest phase of the bear market, right? And you don't want to go long there. You got to wait for that to bottom out. And then it hits a level of panic and despair where people just capitulate. There's a big flush. Investors give up. And that's often the time to go long. And it's the perfect moment to quote Warren Buffett, where he says, be fearful when others are greedy and greedy when others are fearful. And to apply that to where we are today, if you look at the market we're in right now, we're up here, right? And that's where a lot of people start to FOMO in and pile into the trade, right? And that's where Buffett would say, be careful. But in a bear market where something has dropped and bottom, that's where Buffett is a buyer. So just a different approach in how he looks at the market. Okay. So that's Dow theory and how we look at, and we're going to look at some charts here once we go through the slides so I could show you this. But you also want to know, okay, this is great, primary trend, secondary trend, daily fluctuations, but what the heck do I look at? Like, where do I even begin to know what's happening in the whole market? Because Jeremy, you said we need to know what's happening in the whole market. Well, this is where you look at the indices, right? You often hear of the index, right? Indices is just plural for the index, right? And there are four that you need to look at. There's the S&P 500, and you could either look at the SPY, which is the ETF that follows the top 500 most profitable companies. You could trade it. You could trade options on it. And then there's the SPX, which is the actual index. You could trade options on that. You can't trade shares. This is the number one chart that you want to look at every single day if you are going to be a trader and an investor. You want to know this. And I look at the SPX. The SPY is, I'll trade the SPY, but I study the SPX. Okay. Because this will tell you, all right, what's the health of the market? The SPY will tell you that. Our primary trend is bullish right now. You have to know what's happening there. And then you have the triple Qs, which is the NASDAQ, right? This is the technology index. This is the tech heavy index, right? This is your Nvidias, your Apples, your Microsoft. They all live here, right? This is their home. What is happening there? Because this market, and really the market for the past 10, 15 years, has been all about tech. That's what drives the price action. And then there's the old school, the DIA. This is the Dow Jones Industrial. This is 30 blue chip companies, and it reflects old school economic health. What's the trend in the Dow Jones? You need to know that. So far you have the SPX, the QQQ, which is the NASDAQ, the Dow Jones, and then the last one that we're going to look at is IWM. And this is the Russell 2000, and this is our small caps. And this is 2,000 small cap stocks. This is very, very high risk, very high reward companies. And in risk on environments, this thing could pump. And you could see that it just made new all-time highs on Friday. It made new all-time highs today before selling down because I think IWM did finish in the red. So these are the four indices that you want to follow and look at these four through the lens of Dow theory and know what's the primary trend, what's the secondary trend, what level, if we break, is the warning signal fired? And for those of you who like to look at the daily movements, what were the daily fluctuations today? Or what phase are we in? Are we in accumulation, distribution? You could look at all those things on those indices, and that's going to tell you what is happening in the market. Now, here's the other part. If you look at the SPY chart, we're in a bullish trend. If you look at the Qs chart, bullish trend. Dow Jones, we're in a bullish trend. IWM, we're in a bullish trend. If all of your indices are saying bullish trend and they're in a bullish trend, well, guess what? You're in a bullish trend and you trade with the trend. It's when they start to flip and there's some variation that you pause, right? And then finally, I have on here the ES1. This is the S&P futures. This trades 23 hours a day, 5 days a week. So right now, futures are open, and I can tell you how we're trading on those right now. Well, I'll show you those on a chart here in a second. But they give you an idea of how the market will open tomorrow. We're actually down 10.5 points, which is nothing. But it gives you an idea of what's going to happen tomorrow before the market even opens. All right. So that's why we need to know our market indices. Okay. Now, economic data. So you don't have to follow this to a T. You don't need to know all these things, but you should be aware of some of the major data points because it does move markets at times, and it won't so much impact you from a swing trading standpoint, but it could enhance and accelerate a move in a trade that you're on. And especially if you're day trading, you do need to know these. But when we're talking about Dow theory, it says that markets price in economic data months before it becomes obvious and that the markets know what's coming. And that's the other thing too, is a lot of times you'll hear people say, the experts, that the market knows the future and that the prices that you're seeing today reflect what's going to be happening 6 to 8 to 12 months from now. And that's crazy. But that's the sentiment that it knows. It knows all these things because it funnels everything through it. So the key data that, and I'm just going to focus on two things here, because I don't want to overwhelm you and make you think that you have to know all this data. But in this current market environment, and it's been this way really since 2020, you do want to be aware of the inflation data, or what is known as CPI, which is Consumer Price Index, because it does move the market, right? A higher interest rate environment is not good for the stock market. It brings it down because that can lead to rate hikes and sell-offs. And that is not a positive for traders and investors. So the CPI report comes out once a month. We had it last week. It came in hot. And inflation is elevated right now because of the war, because of oil prices. But you do want to pay attention to what is happening with inflation. And then you also want to know what is happening with the Federal Reserve and interest rates. Are they raising rates? Are they cutting rates? If they're cutting rates, that's bullish for the markets. If they're raising rates, that's bearish for the markets. And we actually have a Fed meeting this week on Wednesday at 2:30 with our new Fed chair, Kevin Warsh. I'll be live streaming on the channel if you guys want to join and check that out with me. But they're going to hold rates steady this month. But when rates get cut, that means that people can borrow money at a cheaper rate, and a lot of times that money gets put back into the market. So those are the two things that you really need to pay attention to. And then the last one, I'm just going to skip over GDP and jobs and unemployment data. Uh, if you were day trading, I would spend a little bit more time talking over these things, but you do want to be aware of earnings. So, four times a year, companies report earnings to share how their company is doing, the health of their company, their profit, their revenue, their forward guidance, and you can get massive moves off of earnings reports. The one that I like to cite that happened last September was Oracle, which had $100+ move after hours off of their interest or earnings report. So imagine that. You go into the earnings report and your stock is trading at $175. And then 2 hours later, after the earnings report, after the market closes, it's up $100, right? Those types of things can happen off of earnings, and that can impact your swing trade, right? Because it's not just to the upside that can happen, to the downside, it can happen to where, yeah, your stop could get hit. So, anytime that you're in a swing trade and you're coming up on earnings, you do have to do a little bit of risk management, managing the trade just to protect yourself so that you don't get trapped. All right. So we've covered quite a bit. And what the one thing that I don't want to do is overwhelm you guys with too much on the first night. And so I do just want to pause here for a moment and ask you guys if you have questions about Dow theory. And we're going to actually look at some charts. And I'm going to actually save the moving averages for session two, because again, I don't want to overwhelm you and you guys be like, oh my, this is so much. So let's just pause. What questions do you guys have about Dow theory and primary trend, secondary trend? I want to make sure that I'm able to clarify or answer any questions you have. Yeah, secondary trend is essentially a retest. Wade, yep. So you have your larger trend, you're moving higher, and it's essentially a retest. You're coming down, you're grabbing liquidity, and then more than likely you're continuing higher. If you're moving down, right, your retest is to the upside, right? Right? And then you continue your move down. And that's something to keep in mind too about the movement of stocks. Stocks don't just go straight up, right? Or straight down. You have these pauses, right? Periods of sideways movement and then continuation, right? When you're in a bullish movement and you pull back or you dip, this is often referred to as a retest. And it's completely normal. When you're trading it and it retests and you're going bullish, you don't like it, right? People have a tendency to panic or get frustrated, but it's a normal, natural process. The same thing when you're in a bearish trade and it's dropping, you're going to get those bounces. Again, that's called a retest, but then typically you get continuation and it moves lower. Okay. How much upswing do you need to see to determine the change from bear to bull? That is a great question. So, and that's a perfect segue for me to jump into the charts. And we're going to save our moving averages for session two. So I'm just being sensitive to not overloading your brains. Let me pull this up. Let me pull my chart up here. Let me share this, and I'm going to confirm that you guys can see this. So then I'm not talking away and you're like, dude, I can't see your screen. Please tell me you can see. All right, sweet. You guys are very helpful. All right. All right. Now what happened? I lost it. Hold on. There we go. Okay. So that was a great question from, I believe, was that Brent that asked that? Is that Brent? Yep. Okay. So Brent asked, well, how do you know that the trend has changed from bear to bull? Okay. This, this is trading view. So here's the first thing. I'm assuming that everybody who's here tonight has either gone through the Wealth Accelerator class or one of the boot camps that I've taught and has trading view. If you don't, that's completely fine. Make sure you download TradingView before our next session because we're going to be starting to build out your charts and I want to help you do that. You have to have this set up. And I would recommend downloading the desktop version of TradingView. Just set up a free version of it now and then you could upgrade later if you want. But anyway, this is the SPX chart. You can see up there S&P 500 index. And this is 2025. This was the tariff weakness, right? Liberation Day. We were in an overall bullish trend here. We could see this, right? Bullish trend, new all-time highs, 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 right? Now, I'm just going to walk through Dow Theory here. All right, all-time high. Hey, here's our recent low, right? Now, ladies and gentlemen, and Brent, I'm going to answer your question through this example. Why do we want to pay attention to this recent low here? Why do we want to pay attention to that? Why is this important? Don't worry about answering. It's a benchmark, right? Because if we break below this, what does that tell us? What does it tell us? We know we're in a bullish trend, but if we break below that, what does that tell us as traders and investors? We're going down. But when we talk about Dow theory, we have the primary trend, we have the secondary trend. Right. If we break down below that, that means that remember that that's a warning signal that the primary trend is threatened, right? And I see a lot of good things here. David says reversal, absolutely. Trend is changing. Yep, sellers in control. We got a lower low. And so when we break below that low with aggression here last winter, then hey, this is a warning that the trend is changing because then look what happens. We retest higher, we bounce back up into that low from January 13th. And what happens here? We get rejected, we come down, we bounce, the trend changed, right? We start moving lower. And this drop, I believe, is 21.6%. All right, 21.32. I was off. Now, so Brent's question was, how do we know when a bear market changes into a bull market? Well, was a very short bear market, and some people will argue that this wasn't even a bear market because of the duration. But by technical definition, a bear market is a drop of more than 20% from all-time highs. This is more than 20% from all-time highs. So when this dropped below 20%, you entered a bear market. Now, Brent's question was, how do you change from a bear market back to a bull market? It's the same thing. As soon as you go higher than 20%, you're back in bull market territory. So you have to come above 20% off of the lows. Okay? So that's how you know that the trend changes. But what I want you to do is to just get in the habit of just look at the chart and you can just visually look at this thing and say, all right, we're in a bullish trend, right? We're going higher here, right? We had a little bit of a dip here and now we're pushing back up. We had a huge move today in the markets. But now, what are we going to be watching here, guys? And when I draw this line, why is that line important for us to watch? Why is this line going to be important for us to watch now? Watch to see if we retest it. It should bounce there. What happens if we break below that line? It could be a support, but what happens if we break below that line? If we break below it, it's the warning signal. Remember, that's the market saying, hey, I'm flashing a warning signal. We broke below the most recent low. And if we break below that most recent low and we start setting lower highs and lower lows, the primary trend can change. Okay. So to make this simple, it's just a visual thing to look at. We're moving higher. Here's our secondary trend, right? Moving higher. Secondary, secondary trend, secondary correction, right? And just keep an eye on those recent lows as the areas that have to hold if the trend is to stay intact. Okay. Uh, do normally just check daily timeline or check others. So to keep it simple, you just stick with the daily for now. You also want to get in the habit of looking at the weekly chart to identify the trend because it's just going to give you a little bit more uh, uh, duration to the data that you're looking at. So yeah, fluctuate back and forth from the daily to the weekly. But the main thing that I want you to be able to do is be able to identify the primary trend, right? This is a bullish trend since the 2022 bull market or bear market, which look how small it was in comparison, right? That's not big at all. It was 27% drop. This is a bull market. These little dips along the way, those are secondary corrections. In order for the primary trend to change, you've got to come below 20%. All right. And then the last thing that I'll share with you guys here before we go back to the slides and we'll wrap up class number one, those indices that you should have on your charts, SPX, right? Right there. And the way that you add them, this plus button here, you click it, you just type it in, hit enter, and it'll add that on your watch list. You want to have the QQQ, that's the technology index. Again, same thing. Primary trend. What do we call this, guys? This little dip right here. This is a what? Yep. Secondary. What's this one, guys? What's this? Come on, trying to give you some softballs here. Secondary. What's the primary trend here on IWM? This is your small caps. Bullish. How about this, guys? Let me go over here to the daily. What's your primary trend on Bitcoin? What's your primary trend on Bitcoin? Bearish. Mm-hmm. I flipped it up on you guys. All right, here, I got another one for you. Hold on. Uh, let's go. All right, Dow Jones, right? Bullish or bearish trend? Bull. Yep. What's this guy called right here? This dip. Retest, secondary correction. Yep. So on your trading view, you should have SPX, QQQ, IWM, Dow Jones Industrial. And you're always looking at those four to see where the trends are, if they line up, if the overall markets are bullish or bearish, right? Now, the last thing that I'm going to show you, and we're going to go over to the slides, I talked about the data. Over here on the right side of your chart, you'll see this little calendar icon. Click on that, right? This is where you can see all the economic data for the week, right? And up here, it'll give you the weeks, right? You can go forward, you can go backwards. And I talked about CPI, Consumer Price Index. You can find it right here on that calendar. So you can always know when it's going to be reported. It'll show you what the forecast is for it. And that way you can be aware of when that's going to be delivered. Okay. And it's always the second week of every month that you'll get the inflation data. Okay. All right. So let me just come back over here. And like I said, we're going to come back to, actually, that's it. I don't even need to go back to the slides. So that'll wrap it up for tonight because that's a lot But I'm going to open it up to some questions here that you guys have. But that's the foundation. That's where we're starting with swing trading, is just understanding the trend of the overall markets, the trend of the stocks that we're looking at to swing trade. And then what we're going to add in next will be our moving averages, and then putting those together. And that's how this is going to work. Every class will build on itself sequentially, so that when you get to the end, it's a seamless process that you follow for your swing trade. So questions, comments. Jackie, thank you. What is the best chart? So Pam says, what is the best chart to study for swing trading? So daily is, in my opinion, the best chart interval to look at. And then the weekly, you can use the weekly to help confirm. So swing trading, we want to look at the longer term time frames. So start with the daily and then use the weekly as well. Good question. Other questions? Or I just answered all your questions through the teaching. Or you guys are you logged in and you weren't even paying attention. You're like, this dude, this guy. Thanks, Jackie. All right, well, I'm not gonna keep you guys on if you don't have questions. I'm gonna let you go about your evenings here, but drop a 2 in the chat if you feel confident about Dow theory and that you're walking out of here with some tangible learnings this evening. All right, we got some 2s. All right, good. All right. So we are back here. You are welcome, Daryl. We're back here on Thursday. And so what we're going to do is get into the moving averages, and depending on where we are, I'm going to get a feel for everything. We might shift into volume and hit the moving averages and volume as part of the swing trading process. So please, if you haven't done so already, download TradingView Desktop so that I can help you set up your charts. And then again, basically what will happen is you'll see by the time we get to the 4th class, you'll be able to do this, right? So that's where we're going from here. So you guys are welcome. I appreciate you too. There we go. Watch is on a tear, but hey, I appreciate you guys very much. If I can ask for a real quick favor tonight, hop on the YouTube channel. Courage Pays Better Than Fear. Just pick a video, watch it tonight, drop a comment. That always helps the channel grow the channel. I appreciate all you guys support. I will see you here Thursday. The video will be coming out tomorrow, and have a great night, everybody. Take care. Thanks, guys.